Okay, so I'd like to welcome John Christensen, who is the head of Tax Justice Network. Thank you very much for accepting to talk to me.
It's a pleasure.
I'd like to start by asking you to say a few words about Tax Justice Network. Not everyone in Hungary is familiar with the work of your organization. So could you please tell us a few words about what you do, how you do it, etc.?
Okay, the Tax Justice Network, which was created in 2003, is a global network. It's a network of experts. Many of us are lawyers or financial specialists, economists, international treaty specialists. And we monitor global financial secrecy, lack of international cooperation. We trace tax evasion and tax avoidance. We investigate cases, work with journalists investigating cases, and we push for reform at a global and national level to push back against tax systems which have become very unjust in a world of global financial movements.
Right. Thank you. The reason why I asked you to talk to me was the infamous case of Hungary in the 2012 Price of Offshore Revisited report that you published. So as far as I understand, the first version of this report was published in 2005, and then you published a revised version or a revisited, upgraded version in 2012 entitled The Price of Offshore Revisited. And at the time, it made a huge splash in the international press, including The Guardian, where I saw a map, which I'm going to also post on my blog, where Hungary was featured amongst the 12 biggest losers of offshore in the world, actually in 12th position, ahead of larger countries such as Poland, Ukraine, Turkey, Iran, Kazakhstan. These are much larger countries. And Hungary was featured as having lost $242 billion in the previous decades, the preceding decades. So it was well publicized in the international press. There were a couple of articles in the Hungarian press as well, but then it kind of died down. Not much reaction in terms of politics. So first of all, I'd like to ask you to say a few words about this report, what it was, a little bit about the methodology, if you can. And then I'll ask you to talk a little bit about the reactions to this report. So first, can you say a few words about what the report was and what it said and how it was created?
So as you said, the report came out in two stages. Initially in 2005, when I, working with a chartered accountant who's also an economist, we made an attempt to look at the stock of private personal wealth held offshore, in other words, outside the country, of residents of the people who own that wealth. And the initial figure we came up with was 11.5 trillion US dollars of wealth held offshore, almost entirely evading tax of one kind or another. But we knew at the time that there were significant geographical gaps in our knowledge. The information, the data simply wasn't there at that time. And I later commissioned a company in the United States, a very specialized research consultancy based in New York, which has been tracking international capital flows for decades. And I asked them if they could give us a more updated figure, and my sense was that they were able to fill in some of the gaps that were missing from the earlier figure that we came up with. And they provided us with a range of wealth held offshore, ranging from 24 trillion US dollars, $1 trillion in this context is 1 million million, so 24 million US dollars of personal wealth held offshore. That was the lower limit, 24 trillion. The upper limit was 36 trillion. So the real figure possibly lies somewhere in between there. But even then, there were huge gaps in our knowledge, and we accept that there remain huge gaps in our knowledge because we just do not know enough about how much real estate is held in offshore companies and offshore trusts, and how much other non-financial assets are being held offshore, either through some kind of corporate structure or through some kind of trust or foundation structure. So, I mean, to sum it up, we know that a huge amount of wealth has flowed out of some countries into offshore tax havens and is hidden there behind opaque structures. We also know that some countries are more prone, more vulnerable to these huge capital outflows for a variety of reasons. It might well be because of weak anti-money laundering regulation and compliance. It might be because of secrecy, financial secrecy at the domestic level, tolerance towards corruption, very wide engagement in corruption by political and business elites. Many, many factors might explain why so much money has flowed out of countries like Hungary into offshore tax havens. We tend to look at the tax havens themselves and try to identify the ways in which they provide secrecy to enable these flows of wealth to secretive offshore structures. We tend not to look so much at what are the domestic factors that are enabling huge amounts of wealth to flow out of Hungary. But one thing is clear in almost all cases, we see a large infrastructure of banks, accounting firms, and law firms. We call them collectively the enablers, who enable their clients to shift huge amounts of money offshore using secretive offshore structures, including shell companies and trusts.
Okay, so 242 billion US dollars is a huge amount of money. If this is true, then this would mean that all the austerity, for instance, which was introduced in Hungary in recent decades, was completely senseless. And it would have enabled Hungary to develop much faster than it did if we were able to use this money, if we were able to tax this money, and the state budget would have been able to invest it in, let's say, education or healthcare or roads and stuff. So people would obviously be very curious how you came up with this massive figure. It's an astoundingly large figure. What is the methodology behind this?
Sorry, can I just comment on this? Mm-hmm. The figure you're citing comes from Jim Henry's. I'm not sure if you're recording this. I don't mind if you do, but I don't want this to go out. This comes from Jim Henry's research in the United States, doesn't it?
It comes from.
Sorry, I've got a call coming. I'll just close it off. I'll just have to tell that's one of my colleagues. When we commissioned the researchers in the United States to do this, they didn't use one methodology, they used multiple methodologies. And the reason for this is because when you do a project like this, I mean, it tends to be, one of my colleagues described as an exercise in night vision. You're trying to explore highly secretive financial flows. And therefore you use a variety of different data sets and a variety of different methodologies to arrive at what's called triangulation in other words, have at least 3 different sets of data and methodologies which allow you to arrive at a position on what is the most likely figure. So I can't give you an accurate description of the methodology, because actually multiple methodologies were used in arriving at these at the figures.
Mm-hmm. Now, the next thing is that I wanted to ask you about was, if I was a leading politician in a country that is exposed to such a huge leakage of offshore, the tax base to an offshore jurisdiction, or many offshore jurisdictions, I would be very curious to find out more about such a claim. So if I'd heard about an NGO like yours making such a claim, I would immediately invite you to come and tell us about how you've come up with this claim, where you found the data, etc., etc. And I read in various places on the internet that, for instance, the German Bundestag has invited you, for instance. So Test Justice Network, for instance, testified in front of the Finance Committee of the German Bundestag. There might be other instances as well where you were asked to testify. I'm very curious, has any Hungarian government ever talked to you? Have they ever invited you to explain your findings to them?
Well, as you say, Tax Justice Network has been invited to give expert testimony in front of many parliamentary inquiries around the world, including at the European Commission. And I personally have given expert testimony to Senate inquiries in the United States and elsewhere. And I've discussed this with my colleagues. None of us have ever been invited by any Hungarian politician to give any kind of testimony or explanation or to discuss any aspect of this. Furthermore, I've spoken to my colleagues about our financial secrecy index, which explores how the laws and regulations of different countries enable dirty money flows and tax evasion and so on. And we've looked at Hungary in great detail, at the Hungarian law, to look at the way in which Hungary itself provides secrecy. And it's quite clear that there are many areas where Hungarian laws and regulations are very deficient, but we've never been asked by any Hungarian politicians to provide any expert testimony or advice or guidance.
Not from the government side and not from the opposition side either.
Neither from the government side nor from the opposition. And this is unusual because in most cases, when we flag these things up, we normally get some inquiries, yes, of course, from journalists, but also from opposition members of parliament and so on. I've asked my colleagues, and they confirm that we haven't had any inquiries, nor did we have any help from the Ministry of Finance or financial intelligence units or any other agency within the Hungarian state. We've had no help from them in the compilation of the financial secrecy index itself. And that itself is also quite unusual.
Mm-hmm. I presume if you were asked to testify, or if you were asked to talk to the Hungarian authorities or the Hungarian opposition, you would be willing to come and talk to them.
We are willing to talk to any government anywhere in the world, happy to do that. We can do it by Zoom in these days of lockdown. There are a number of things which we'd like to flag up, areas where we feel that Hungary is particularly deficient in terms of financial transparency. For example, records of company ownership, highly deficient, records of making company ownership publicly available on a public registry, totally deficient there. very weak disclosure, in fact, non-existent disclosure on corporate tax-related matters. In other words, many areas where Hungarian laws and practices and institutional arrangements are very weak and need to be urgently strengthened.
Okay. Is there anything else that you would like to add that I haven't asked you about?
Not at this stage. Other than that, I very much welcome an opportunity to flag up our concerns and to advise Hungarian politicians on areas where we think they could very quickly strengthen the regime and strengthen measures to prevent capital outflows. I suppose one other thing I would like to mention is, as you've already said, capital outflows on the scale that have been recorded will have dramatically impacted, in a very negative sort of way, the ability of Hungary to develop its economy from its own financial resources. So this has been, I think, extremely harmful to Hungarian economic and social development. And the imposition of austerity on top of that has simply made matters worse. But the only way I think the government can remedy this is by taking urgent action now to remedy the outflows and to take measures to bring capital back on shore and to implement fairer taxes. I'm not just talking about corporate taxes or personal income taxes, but wealth taxes, inheritance taxes, capital gains taxes. All of those, these taxes will be undermined by these massive outflows of capital to offshore tax havens. And this inevitably, which has built up over many decades, has undermined development in Hungary.
Right. There's one thing that came to my mind just now, that the report that we were referring to, Price of Offshore Revisited, that only refers to high net worth individuals, right? So that report is because Hungary has an economic structure which is strongly based on transnational firms, which engage in a lot of transfer pricing, and that's also part of the offshore tax-based shifting. So the report that we have been discussing so far is only related to high net worth individuals, right?
Yes. So the price of offshore and the price of offshore revisited, looking at high net wealth individuals. There is another part of the equation, as you say, there's the corporate tax avoidance. And what we've seen here is a comprehensive breakdown of global rules as markets globalized, as multinational companies became dominant in many, many countries, not just in Hungary, but in many other countries. Multinational companies have become dominant in most sectors of the economy. And multinational companies are particularly well placed to use sophisticated tax avoidance and tax evasion structures, typically using offshore tax havens, to shift their profits out of Hungary to offshore tax havens. Now, that means that Hungary misses out on huge amounts of revenue from corporate income tax. And of course, the tax haven economies, by and large, don't charge any tax on profits that are booked as revenue. The IMF puts the figure at somewhere close to $500 billion of corporate tax avoidance every single year. And I assume that's quite a significant hit for the Hungarian government as well, because of the scale of operation of multinational companies within Hungary. So yes, that's another part of the equation. I mean, if you add to that furthermore the domestic tax evasion and so on, and the numbers very quickly build up. Now, I'm not in a position to be able to comment about the capacity of the Hungarian tax revenue to counter, to push back against this corporate tax avoidance and tax evasion. What I do know is that in most countries in Europe, there's a lack of capacity in this area. And I would also say there's a lack of political will to really tackle this issue.
Okay, I think that's pretty much what I wanted to talk about. Thank you very much, John Christensen, for accepting to talk to me, and I wish you good luck with your work in the future.
Thank you very much indeed. Very good to speak with you, and good luck. Stay safe in the current crisis.
Stay safe as well. Thank you. Thank you.